All right, next question. Such asks, I'm trying to understand who controls the stock market. That is, let's say Amazon stocks. Does Amazon control their stocks, or investors like banks slash hedge funds control the stocks? Now, this is a great question because a lot of people either take these things for granted and they think that, hey, I don't need to understand any of this, or they want to understand and they're too shy to ask. So I'm glad you asked this question. And those of you who have similar questions, I encourage you guys to ask away. All right, so the stock market. What exactly is the stock market? The stock market is simply a marketplace. Think of something like eBay or Amazon, where buyers and sellers meet at a marketplace to sell goods, right? Well, a stock market is where buyers and sellers meet at a marketplace to buy shares of a company, right? So when a company initially goes from private, right, to public, they offer an IPO, right? An IPO essentially stands for initial public offering, where they list their shares on a public stock market for people to come and buy ownership of the company. Now, the key word for you guys to focus in IPO is public, right? Initial public offering. It's offered to the public. So anyone in the country slash the world can participate in buying shares of the company, right? And they're all listed on the stock market. You can actually go and get a breakdown of whatever company you want to look at and get a breakdown of the top 10 owners of so-and-so company. Right over here, I have a breakdown of Amazon, since you mentioned Amazon. I think I pulled this down from NASDAQ, right? But you can get this information from various websites. So just simply do a quick Google and you'll be able to find a breakdown of the owners of a particular company. Here you can see that Vanguard is the top owner. And Vanguard, by the way, is an ETF, right? So they do buys and sells on behalf of the general public. You are likely going to find Vanguard on top of every company, most big companies at the very least, as the major number one stockholder, right? So yeah, to answer your question, does Amazon have control of all their stocks? No, they don't, right? It's owned by a variety of people, and you can see the breakdown over here. So yeah, investors, banks, hedge funds, you can actually see some of them right over here on the list, right? Fidelity Management, BlackRock, right over here. So yeah, once a company is offered publicly on a stock market, the company does not control the stocks anymore, right? If the company wants to control the stocks, it could do so by taking the company private again, right? You could go from private to public and go back to private. And a good example of that is what Elon did with Twitter, right? Twitter was initially private, they went public, and then Elon took it back to private. Okay, so next part of your question, and this is the fun bit of your question. I really like this question. Also, Sachin says, I was trying to revisit the 2008 recession, and I'm glad you're going back and looking at the charts, man. That's how I got really good at not only TA, but controlling my emotions through these kind of episodes, right? I actually went and emotionally traded. When I say emotionally traded, I tried to sit through every one of these candles of the entire Bitcoin rally from start to end, as well as the stock market, right? So yeah, we can, I'm glad you're doing that. So you say, also, I was trying to revisit the 2008 recession on how it could have been identified purely on TA basis. I was watching The Big Short recently and I got curious, but I couldn't figure it out as I'm not so good in macroeconomics, but learning as much as I can from your videos. Okay, so Michael Burry, the guy who is famous for putting on The Big Short during the 2008 financial crisis, he did not use pure TA, right? He did a fundamental deep dive. And by the way, guys, I recommend reading the book, right? The Big Short, as opposed to the movie. Yeah, the movie is great. Watch the movie, great movie, but the book is going to give you guys great insight. So yeah, Burry, what he did was he did a fundamental deep dive by analyzing all of the CDOs, the CMOs. So CDOs are collateralized debt obligations and the CMOs are collateralized mortgage obligations. And he assessed them in the mortgage-backed security market, and he basically came to the conclusion that most of the mortgages that were wrapped in these financial instruments were all basically garbage, right? Because after looking at all of the debtors within these obligations, he realized that none of them were going to meet their obligations, right? So essentially, all of these were going to go to zero. So he did a deep dive because he had a team of analysts, etc., etc. That's one of the reasons why I moved away from fundamental analysis and moved into technical analysis, because you need a massive team, a lot of time on top of having a team to be able to successfully pull off fundamental analysis, right? There's a lot of research and manpower required. However, with technical analysis, you can simply identify a booming market and play the trend, right? Which is where your advanced trend analysis module in the C program is going to be extremely beneficial for you, Sachin. I recommend you guys, like every time people ask me, what's your favorite module? For me, it's always the advanced trend analysis module, because it literally allows you to not only trade the lower time frames like a professional trader, but you will also be able to invest in trending markets, right? Right over here, you guys can see how the stock market was trending, right? It was trending really well. But look at what it did over here. That was your big warning sign. And how familiar is this to you guys? In fact, let me just go ahead and quickly erase all of this, and let me zoom in to this chart for you. Okay. All right, there we go. And again, like I was saying, how familiar is this? Well, at first we had a nice little upthrust. We had a little high over here, a higher low, higher high, higher low still, right? And then another higher high. And then what happened, guys? Well, we put in a lower low, right? Failure by the bulls to maintain that structure of higher highs and higher lows. Instead, we put in a lower low right over here, continued with a lower high, essentially beginning your downtrend after that, right? And this, guys, is your M pattern, right? We put in a perfect M, and this looks so similar to Bitcoin. Now, let's go ahead and erase all of this, okay? You didn't need to get out right over here on the top. You could have simply gotten out over here. In fact, if you waited for the breakdown, and yes, it took a few months, you got a perfect retest of the neckline right over there, and then continuation. This, from this drop to this drop, I believe was a good 40%, right? We'll go to the charts really soon, but I believe this was a good 40%, and that is huge. That is huge in the stock market. To put things into perspective, I believe the current drawdown in the stock market is only around 15% to 20%. This is, of course, after the rally, right? And people are still losing their shit over this current drawdown. This drawdown, this 40% drawdown, you could have completely avoided by just using simple advanced trend analysis from the concepts that you already have access to. Just rewatch them. They need to get embedded into your head, man. And once you do, right, you're not gonna put yourself in any trouble, regardless of any fundamental knowledge that you are lacking. Alrighty, and here we are on the charts, and we're looking at SPY at the moment, the 2008 financial crisis region where we broke down. We're looking at the monthly time frame, and you guys can see that this drawdown. Okay, so first, again, let's rehash what we were talking about. M-like formation. Here's our neckline that I have marked out as a zone. We retested that perfectly, right? This is simple TA. You did not need to know what was going on during the financial crisis, etc., to know that, hey, this is not looking good. We have broken a massive structure, right? Your advanced trend analysis module, guys, very simple. You do not want to be going leverage long. Like if you had a leverage long position, right? Let's say you longed here, right? Great, good call. Market bounce and test the neckline. Do we break and close above the neckline? Just wait for the monthly close. How often have I told you guys, wait for the monthly close and you will know all, right? Well, the monthly close and we did not reclaim that neckline. That's enough for you to say, F it, I'm taking my profits and I'm getting out, right? Or let's say you did not long here. Let's say you were riding this entire trend, right? This entire bull market. You sat through all of these months. You're working your full-time job. You're enjoying these profits. And then the market breaks down. You're still sitting pretty well in profits, right? So from around here to around here, you're still up a good 70%, okay? Everything's good. Now you're waiting patiently, right? You're using the mango way. You're being stress-free. You're waiting patiently for the market to give you the right signs. Market starts bouncing. You're feeling really good. But now you're using a simple trend analysis. You're like, wait a minute. We haven't reclaimed the zone. We rejected it. That's it. The monthly closed badly. I'm getting out of my stocks. I'm at least selling 50%, 75%, whatever your risk management is. You decide to get out of it, okay? What happens after? Boom. Look at that. Look at that. And guess what that drawdown, guys, was? Not 40%, It was actually 52%. That is huge. That is huge in stock market terms, right? So you would have been sitting underneath where you entered. So you'd have turned what was a 70% profit now into, well, 17% loss, which would have been painful to endure after going through. It literally undid 8 years of action, guys. 8 years of action. That is ridiculous. 2,219 days worth of price action all evaporated in these few months, right? But your trend analysis, without you knowing anything about Burry knew, right? All that analysis that Michael Burry did, you could have just seen on the charts. And now I'm going to show you guys how Bitcoin also gave us the same signs. If you guys have been following Mango for even a year, you guys know what we were looking at, right? We were like, hey, Bitcoin is losing key levels that we don't like, right? A very, very similar structure over here. By the way, looking at Bitcoin now, right? This chart over here is Bitcoin. We're looking at the monthly time frame again, right? SPY, we're looking at the monthly. Bitcoin, we're looking at the monthly. You don't need to get caught up in the lower time frames, guys. The monthly will tell you a lot, okay? Now, look at Bitcoin. What Bitcoin do? Very, very similar, guys. Very, very similar structure. We put in a nice little up thrust, right? Put in a high, higher low, higher high. Again, very similar, very similar. But then what happened? What happened? We failed to maintain that higher low, right? As soon as we took out this low over here, guys, right? That M-like formation was broken, right? And we had our downtrend begin. And if you guys do remember, like even if you're bad at analyzing your trend analysis, there were two things that we were looking at, and one of the things was the Mango dynamic, right? And look at that, okay? Look at that. Look at how we close underneath. Right over here, I remember a few of you guys asking me, hey Sean, we close underneath the Mango dynamic, but we close ever so slightly underneath. Does it count? Yes, it counts, period. You do not negotiate with your risk management. As soon as something is set in stone for you that, hey, I'm going to be getting out and at so-and-so levels, or I'm not going to be taking leverage trades anymore at so-and-so levels, well, you stick to those rules. That's what risk management is all about. And right over here, we close underneath the dynamic, gave us a perfect retest, right? So you had a nice month. For how fast crypto moves, guys, crypto is also really generous. And look at that. You had enough time to get out right over here. We poked our head up, right, giving us a nice exit out of all our trades, and Bitcoin just kept going down after that, right? If you guys do remember, over here we were bullish, right? Do you guys remember this month where everyone gave me shit for being bullish? Why did I get bullish? Because of this monthly candle. The monthly candle dipped underneath and closed high. And then once we got this candle after that, where it was a green candle with tempo turning white, right? This white candle, guys, represents tempo. You guys can see tempo's off at the moment for the current Bitcoin candle. Well, over here, we turned white, right? And we held the dynamic as well. I turned bullish, right? And boom, we had our move towards the upside. Now, we were looking for Bitcoin to hold this level over here. Of course, you guys all know I am bullish on Bitcoin long term. I have my biases on Bitcoin, but I don't let my biases overpower my TA. My TA is first at all times, And we close underneath the dynamic. I'm like, that's it, man. This counts, period. So you guys could have been using the dynamic, and the dynamic is designed for being a lot more tight with your trades. Or if you don't have the dynamic, well, you could have still simply drawn in a horizontal over there, right? Marked in your low right over here, right? And said, okay, we lose this horizontal, that's it for me, right? And if we lose this low as well, that's also it for me. If we lose both, that's definitely it for me. And we did that. We did that on this month over here. That's the month of May. We closed underneath the horizontal and we took out the low in the same month. That was it. That was the beginning, the official beginning of the bear market structure initiating its downtrend. Alrighty, so I'm going to wrap it up over here. As you guys can see, Bitcoin and SPY from 2008 looking frighteningly similar, at least in regards to market structure, right? We had a M-like formation where Bitcoin poked its head up ever so slightly compared to its previous monthly high closes. And hey, SPY did the same thing, right? Stuck its head out ever so slightly, and that initiated one of the worst markets in the history of SPY. Now again, I hope you guys enjoyed this video. Please let me know if you guys are enjoying this kind of content. Please keep the questions coming, and your comments have been extremely motivating in encouraging me to keep these kind of videos on a regular basis. So until the next video, I'll see you guys in the Mango Discord. Ciao.